Hey guys, Crypto Sunday, and it's been a very green week. About 9% up, 36k. Not really sort of getting too excited by this because it's still just up and down every week at the moment since the halving. Probably still got a little bit more sort of chop and working through this. Sort of see from some of the news, people are still sort of working through how this is all going to play out. But yeah, certainly been a good week. Let's have a look at some of the news. So just looking at the coin shares report, we did get a small positive of 130 million after sort of 4 weeks of outflows, especially sort of since the halving as well. That's been a bit of a price drop and sort of uncertainty. This has mostly come from inflows into Bitcoin, 144 million. You had 14 million outflow from Ethereum, 3.4 outflow from the multi-asset. Don't see that very often. 5.9 million into Solana, which is pretty good. Small outflows from Binance. Short Bitcoin down, I guess because Bitcoin is up. People were sort of maybe taking a bit of profit on those and sort of closing some positions as the price rose. And then small inflows into Litecoin, XRP, 1.2 million into Polkadot, not too bad. They only have 46 million in assets under management, and then 1.3 into other coins. Just looking at flows by country, Brazil, sort of a small inflow, but still not outflows at the moment. Australia with a small inflow, and then Canada, Germany, and Sweden with reasonable outflows. Switzerland and Hong Kong with inflows. So not too bad, bit of a mixed bag. Just looking at the recent news, keeping an eye on the Hong Kong ETFs as well. Not sure sort of quite what they are measuring because they seem to be showing sort of a reasonable amount of outflows for the last couple of weeks. So yeah, a little bit unusual. Obviously, that doesn't cover this past week with the 39 million and 13 million outflow, so I guess they'll be showing negative the next week. But yeah, it does cover these two 6 millions after the 4 million inflows. So yeah, a little bit unusual, sort of a bit of a disparity between these figures. But the Hong Kong sort of flows are fairly small. Just looking at Bitcoin recent flows, we have gone back to inflows, it seems. Whether this is temporary or not, we sort of saw a couple of reasonable inflow days, a week or so ago, a couple of weeks ago, and it sort of went back to hit and miss. But yeah, we've had sort of, well, 3 solid days of inflows and a couple of smaller days. Spread around quite a bit, to be honest. You had earlier in the week 133 million inflow into ARK. So, yeah, and then sort of more following that. ARK, I always think of as probably the more emotional investors, your BlackRocks and people like that. You would think would be a bit more long term, and Fidelity seeing some reasonable numbers as well. So yeah, inflows across the board, even inflows into Grayscale, I guess on a net basis. Even if there is selling out of the sort of original GBTC, they now have the cheapest product on the market. So not surprising, the sort of some of the inflows that might have been going into BlackRock may now be going into this cheap Grayscale one. So yeah, not too bad overall. Just speaking of inflows as well, Coin Telegraph have reported over 600 firms now from the sort of various 13Fs and other filings. Over 600 firms have an investment in the Bitcoin ETFs. So it was sort of seen as largely sort of retail so far, but it seems you have had a lot of institutions getting in. You had sort of, we reported last week there was quite a few, but you've had Schonfield Strategic Advisors. They have 13 billion in assets under management. They have a 248 million investment in the BlackRock one, and 231 million in Fidelity. So yeah, 479 million out of 13 billion. That's quite the investment. I think the sort of bull case for a lot of these funds eventually getting in was that they would hold sort of 1%, maybe, up to 2% of their assets under management in the Bitcoin ETFs. And sort of some of these you're looking at 3.5%, 4%. So, yeah, whether that means they bought very early on and it's gone up in price, could be that. And they're sort of potentially looking to take profit or maybe just sort of hold on to it. But yeah, interesting. Booth Bay Fund Management with 377 million. So they're not going in small size. Again, interestingly, they sort of split this between BlackRock, Fidelity, but then put some into Grayscale. It's 1.5%. I sort of think you can't care about the liquidity that much, surely. It just seems very odd. This isn't new. Obviously the new Grayscale product, because this is end of March filings, so they've put it into Grayscale, maybe just wanting the high liquidity, but I just think who's buying it? There might be a lot of volume from people selling, but who is wanting to buy it? But there you go. We'll have to see the Q2 13Fs. I expect that's going to be a bit of a negative news, as sort of a lot of people have taken profits, and people who we have been talking about as super bullish put a load in. They may have sort of sold some or sold all of it potentially. You might find that it's sort of more of a trade. I think we've had a lot of hedge funds buying, and sort of they're typically not super long-term holders in anything. They're sort of paid to be contrarian and sort of be very active managed. So we'll have to see. You have had a bit of concern in the House. Sort of, we reported recently the division between the US House and the SEC and the President. So it's going all the way to the top, and yeah, the House bill wants to establish a US regulatory regime for digital assets, going to the floor next week, but sort of various things. The president is just seems to be against crypto, so he can use his veto for sort of lots of these acts, basically. And as I say, there's uncertainty about miners. We always knew sort of a fair amount of them would switch off after the halving. This was sort of seems to have been delayed a little bit because of runes launching. That sort of spiked fees and made some rigs that wouldn't have been profitable suddenly still profitable for another few weeks. That sort of seems to have died down. Fees have dropped back again, and some of these rigs finally switching off. So Bitcoin mining cost has dropped to $45,000 per Bitcoin now, as efficient miners exit, according to JP Morgan. Again, this is sort of an analyst or group of analysts at JP Morgan. It doesn't mean Jamie Dimon is buying, doesn't mean he's bullish or anything. He's not flip-flopping, as so many sort of YouTubers seem to be saying. He also had the price obviously dropping at this point, so it was sort of running up to 74,000 before the halving, and with sort of runes as well, with the price still reasonably high. You can see some sort of very old rigs would carry on, but you've had this sort of double whammy of runes dying down a little bit, the hype dying down, and the price dropping as well. That does cause people to switch off. So just looking at the hash rate, yeah, as expected, you have seen this sort of over the last 6 months rising up to pretty much the point of the halving, and the peak was the 20th of April. This is 7-day average, so it's not sort of necessarily the absolute peak, but the 1 day sort of just looks a little bit crazier, more sort of less, you could say, less obvious that the hash rate has dropped, but when you look at the 7-day average, you can see sort of it basically peaked on the day of the halving and has been sort of dropping off a little ever since, and we have had one downwards difficulty adjustment since then. There was one sort of a few days after the halving, but obviously that was taken a week and a half before the halving, so it was a small increase, but then dropped from 88 to 83, and yeah, We've got another one coming up in the next few days, although it is expected to be sort of near enough flat. But yeah, flat isn't rising at least. So yeah, not too bad. Should hopefully provide a little bit of a reprieve for the miners. So if you start to see sort of difficulty, potentially even dropping a little more if some more rigs switch off, and price potentially going up in the next couple of months, that would be a double whammy for the miners, and we should start to see some decent price action. Another Wall Street story as well, the CME planning to launch spot trading. So I think they have grown to be the biggest futures trading platform in the world, overtaking Binance. They were sort of back and forth with Binance, but I think they have sort of pretty much cemented their futures position. And yeah, they want to get in on spot trading. So you did see Coinbase drop a reasonable amount on this. Sort of, I think this was always the case. I've been saying this forever. As it, if price goes up and it sort of matures as an industry, you were always going to see bigger firms and Wall Street and people driving down costs and taking a piece of this action. So not 100%, not really surprised to see Coinbase dropping a little on this, but yeah, some people they're saying would want to trade on CME because you have futures there as well. So they would be largely just getting in for an arbitrage trade. They're saying a lot of companies are interested in doing basis trades. So you borrow money to sell futures while buying the underlying asset and sort of profiting from any difference. And they're quite happy if that is a very, very small difference because you're unless something blows up, which is unlikely to with someone as big as the CME, then you're sort of it's just guaranteed money. It doesn't matter whether Bitcoin doubles or drops 50%. They just make sort of a small amount guaranteed. So I guess they start leveraging that up, and yeah, it sort of lowers volatility and lowers the difference between futures and spot price, which I would suppose be seen as sort of more mature, more legitimate. So yeah, I think people are sort of probably seeing this as maybe a negative. The launch of CME futures originally marked pretty much the top of the market, but yeah, I don't think there's a huge amount of manipulation that could be going on with spot Bitcoin, assuming that they're sort of one-to-one backed and not doing anything nefarious. Then I would only see this as good news. From what they're saying, it's not going to launch, suddenly have loads and loads of people buying in, to hold long term. If they want to do that, it seems like they would probably go for the ETFs, but it's sort of providing a more legitimate market and reducing volatility. So has to be good. They have sort of said large traditional exchanges have a patchy record. Sort of German exchanges launched its own digital assets market this year. CBOE Global Markets last month has said that they would close down its spot market, blaming a lack of clear US regulation. So it's not necessarily down to poor business, but they just don't want to be exposed to that. This is Wall Street sort of getting their tentacles into crypto even more. They're saying, this would be large regulated exchanges becoming more comfortable with the infrastructure and sort of looking at custodying coins, which they have, still got that bank move in the US, whether the big banks are allowed to custody it, but whether they change the rules on collateral as well, then you can start having tokenized money market funds and that sort of thing. And then you can have margin calls be a little bit more orderly. Similar to how they are on decentralized exchanges, really, because it's sort of largely done on smart contracts, and it just happens the second you're too low, you get your assets liquidated, and that is it. It's not sort of margin calls, literally calls, and asking you to sort of post more liquidity and that sort of thing. It's just it works seamlessly, but that's why you get the sort of enormous wicks down when sort of coins are automatically sold when it goes past a certain level. It looks bad, but it's actually efficient markets. So we'll have to see. So I keep reporting this every week, but it doesn't look like it's changing anytime soon on the Ethereum burning. Again, you had 4,300 burnt and 15,000 issued in a week. The 30-day chart still completely upwards, and the time since the merge chart is sort of on its way up. I would say this is a pretty much equal, if not sort of slightly steeper move than this sort of was probably the largest move upwards since the merge. So it does look like at the moment this is becoming a trend, whether sort of more activity is moving to a combination of the layer 2s such as Base and Solana. It's not looking all that good. This is why the Ethereum Bitcoin chart again has dropped right down since sort of last Sunday. I reported it had gone below 0.048. It's now sort of 0.046 and did go as low as 0.044. Sort of come back ever so slightly, but yeah, if you look on the sort of the longer term, it is quite a bit down. They do need some sort of catalyst. You got the ETF decision coming up, so we all sort of assume that's going to get rejected, but it's more about what they say and why it's rejected and sort of what that would mean going forward. Obviously, you have got the sort of the 1 in 100 possibility that they suddenly approve them, and then I guess you would see this roar back into life on potential of some of this institutional money coming into Ethereum. It does look like they won't be able to have staking rewards. So yeah, if you hold hold Ethereum yourself, you can stake it and sort of get 4 or 5% yield. Whereas if you buy the ETF, it looks like you're probably going to get 0. So it does make it a lot less attractive. Obviously, Bitcoin, is what it is. If you buy it yourself, that is it. If you buy it in the ETFs, it's the same. Then I expect you could get a bit of a more muted response to the ETFs for Ethereum if there's no staking. But yeah, companies might have to sort of learn how to do it and self-custody it themselves. So, just looking at coins for the week, pretty much everything is green in varying amounts. Bitcoin is up 8.6%, very, very nice. Obviously contributed a large amount of the gain. Although Solana, 18.5%, is sort of pretty much on the heels of Bitcoin as to how much that has produced for the week. Ethereum up 5.3%, not too bad, but lagging. Chainlink 23%. That is the outperformer for the week. Very nice. Cardano up 7.6. XRP 1.8. Not great, but XRP never is. One day I'm sure it's going to do something. Gala 7.2%. Power Ledger 4. Internet Computer 10%. Matic 2.9. Still poor. Quant 0.6%, still very poor. Audius is the only red for the week, down 1%. They're not looking too good at all. I haven't looked at the dashboard recently to see if anybody is using it, but we'll have to take a look. Basic Attention Token 5%, and VeChain is flat. So very mixed bag. It's still not alt season, as they say. It's only the big coins really sort of doing well, but we're still sort of fairly early on. I think later this year and sort of into next year would probably be, if it is going to come, alt season time. So we'll see. So leave your thoughts in comments below, how you guys are doing, and if you're buying anything, still sort of potentially time to be buying and get some gain, maybe in some of these altcoins. But yeah, like and subscribe, and see you soon.